Welcome, everyone. I'm Greg Schnell, the Canadian technician, here to host the Market Buzz. This show looks at weekly setups across the U.S. market. Using the tools available on StockCharts, we'll look for long time frame trades. Please subscribe to my articles and Twitter feed for more information throughout the week. So, after a rocky Thursday, Friday, Tuesday, now we're trying to see if we can rally here. And we've got lots going on, so I want to cover it off as much as I can. So the global PMIs are actually turning up slightly, but still ugly. So we're going to talk specifically about those. And then the US dollar, another reversal bar yesterday, and then the dollar falling today and oil bouncing again. It looks to me like commodities are trying to base here, and I think that would probably fit with some sort of new momentum in either the PMIs or the trade relationships or whatever, but there's definitely people looking for a bullish fourth quarter here. And I have to tell you, like, it feels so difficult to be long here. There's so much negative pessimism in the news, but my charts are starting to turn up, and so I have to kind of follow that. Energy, keep watching crude oil and nat gas. I know crude oil has been out of favor forever, but again, it's a commodity, and so you want to buy them near the lows, not near the highs. So keep watching. I will put one caveat on energy, and that's that the gasoline numbers were terrible yesterday. So the gas price just plummeted. So anyway, some of the Canadian energy names are leading, and the only reason I point to that is they have been just horrifically beaten for 3 or 4 years, and the U.S. ones are beaten as well. I would just say some of the Canadian ones are already starting to turn, the US ones not quite as much. So just kind of keep an eye on that. But I'm looking for commodities to bottom here, and we're getting support from the semiconductors, from the broker dealers and leading industry groups like that, that just suggest to me that perhaps commodities could run. And the other thing that you might remember is that energy tends to be the last sector to top. So if energy was to go on a final run here, that might fit with the overall big bull message. So again, really difficult to try and line it all up here because the risk feels so high. I will say watch Martin Pring's latest video. It'll be up later today on the StockCharts YouTube channel, and my latest video that I did on the weekend as well, and why I turned a little bit bullish, even though I'm uncomfortably so. But that's the way the data is starting to show up, so I'm trying to follow the data and not my heart. I think I should have changed this to August or to September 4th. I changed it on the previous slide, but this is the schedule of places where I'll be speaking at. So here's San Francisco, Golden Gate University next week already, not 3 or 4 days from now, but a week out. And then you can go to tsaasf.org for the above, and it's a one-day conference. Should be great. Some really good speakers there. Craig Johnson from Piper Jaffray as an example, so it should be good. CMT Association meeting in Minneapolis on September 17th, so I'm looking forward to attending that. And the Toronto Money Show September 20th and 21st, as well as the Canadian Technicians Day, which is October the 19th, which will be live and online. So we should be a pretty interesting month ahead here. So, okay, let's jump into the charts. And so this is the PMI website, and on this PMI website, there's all of the different, you can go through and just click on this PMI data. And so what I would encourage you to look at is just the way things are setting up. And the reason I want to go through this a little bit, I don't usually cover it off in this much detail, but here's what we have for the ISM or IHS market manufacturing PMI. What you see here is this 50 line, and it went below here in 08. So what I heard on the news was, it hasn't been this low since September 2009, or it hasn't been this, the last time it broke down this hard, it was 08. And that's true, but there were 2012, 2016 were down kind of in similar levels. Now, Again, the real question is, are we falling off the grid here, or do we actually have a setup where everything can hold? And I would just say that it feels to me like we could fall off the grid at any second, but I'm shocked at some of the strength in the market. So that tells me that there's either something going on behind the scenes, or that it is starting to, we're starting to see some turn up. Now, when you look at these manufacturing production numbers, you're down here in the right hand corner, obviously, for the last 5 years, but we were here in 2012, 13, 16, and the employment index has broken down, but the manufacturing payrolls has not yet. So probably going to expect that to start to fall here in the next couple of weeks, months. So that would be an issue. But I will say one of the things that bothers us is when we hear words like this: deteriorating exports are the key to the downturn, with new orders from foreign markets dropping at the fastest rate since 2009. So it's not so much the level, it's the fact that the new orders are plummeting and there seems to be a lot of uncertainty. So I have to say that makes it so hard for me to be long when I hear that. But we're going to cover off a couple of reasons why things might be okay. So here's the European area, and what you see is this actually improved to 51.9. And the business activity index was up to 53.5. So when you look at these, France is at a 9-month high, Germany's at a 2-month high, which at least they're not continuing to drop. And those two are the most important, I would suggest. But here's Spain, pretty good, and Italy still dripping a little. When you go through these, the big thing that it talks about in all of these charts is the growth is the growth in new business was solid, but nonetheless the weakest in the past 3 months. So it just kind of keeps leaking like that. That makes it more difficult. And so when we look at these numbers here, again, the market seems to have a bid under it, even though all of these charts, this has been pointing down for a year now. And perhaps, just after a while, it gets so weak that it eventually turns. Japan, this one, look at this headline: activity grows at the sharpest rate in the last 2 years. And you can see the chart starting to break out to the upside. So that can't help but be bullish. When we look at Hong Kong, exactly the opposite. This one's plummeting, and I think we all know why, with the protests in the street and that kind of thing. So this is a really ugly level, but look at the level it's down to, kind of the worst it got in 08. It's almost there already. So when it fell off the table, it really fell off the table. And this is just to pick one of the countries out of the Middle East, and you can see that theirs is plummeting as well. So we have this backdrop of everything being weak, but we have Europe trying to improve, Japan trying to improve. And as these data points roll up, I think that's kind of critical for us to be aware of. So for me, again, putting money to work is okay. I did, and I have, but I think the big thing that we're looking for is we want to see this momentum start to improve. And one of the things that gives us some help here is the PPO, or the MACD in this case, moving up for the S&P 500, rolling down and trying to bounce off zero. This is really important. And the other thing that when we see this, and I'll just scroll to the bottom quickly and come back, but I just want to show you kind of the 2-month view on this chart. The idea being, when you start to build a higher low on this momentum indicator on the MACD, this is usually the nice place to rally from. Now, the other side of it is it could go back like the August 12th period here and come down, fail, and roll down. And that would obviously be more cautionary, because I think if we fail out here on the far end, we're probably going to break hard. But look at this trend line that's setting up on the VIX. If this starts to break down at all, I think that cracks a lot. And this turning up above zero would be bullish. We haven't got a situation where so far the lows are higher lows. And so we're continuing to watch it. at this point, it looks like the Russell has made a higher low, and the Toronto Stock Exchange, which is usually weaker than the US, actually broke out to new 1-month highs on the back of some surging energy. So all of these things are starting to improve. Now, the real question is, we haven't had any issues around China and whether or not they're coming for the meeting in September. We haven't had any tweets discussing, more tariffs or anything for over a week. So it's been relative calm, and the market's been trying to follow that up. So here we are with natural gas, and it's starting to break out here. This is almost a 2-month high. We've been talking about this on my market review over the weekends, so hopefully you're catching those. But here's the US crude, and what we see is, this has been jogging down. It briefly dipped below here and starting to turn up. But on some of the oil stocks, and I've got a chart list I want to show you here in a second, some of them are having unbelievable days here trying to rally. And gold obviously broke out, and I think the big question for everybody is, is this rally for real? Yes, it's definitely for real. And more importantly, I think, is when gold pulls back. So usually you will have a run up, and then you'll have a breath of fresh air come into it and pause everything. And when that pause happens, I think for people who haven't got invested in gold, that would be a nice time to start adding, because the breakout is on a big long-term base, and so we want to be critically aware of that. Normally when that happens, that just kind of means suck it up, find a place to get in, and just put some money to work over a longer term on those charts. And that big long-term move in gold, I don't know, pick a name, 6 years, 7 years, it was up from 2003 to 2007. So I guess that was a good 4 or 5 year run there. And when you're watching these big breakouts and then still, using a 60-minute chart or a daily chart, you're kind of missing the big ticket. And so what we want to do is keep an eye on an opportunity to enter if you haven't already. And then when it turns back up again, hopefully you're on the train for the big part of the move. The bonds here, you can see this is the 100-period moving average of TLT on the 60-minute chart, and it shot up, and now it's just consolidating sideways here for going on 3 weeks. The real question is, you'll notice that the gold trend and the TLT trend are roughly the same. So if this bond starts to change direction, that might give us the opportunity to jump into the gold chart sooner than later. And UUP put a big reversal candle in yesterday. Maybe I should just go get US dollar here and show that to you. The one thing that on the US dollar, we've had a big uptrend going. This is the daily. I'm going to just go get a chart for you. But look at this reversal candle here where we opened above yesterday's or above Friday's close, shot up and closed right near the low of the bar. And today we're going down again. That chart means a little bit, but it means a lot more when we put it into this perspective. Just grab this chart. So if the US dollar was going to start to fail is a hard word. If the US dollar was going to start to roll over from this level, and this isn't even the one I wanted a different chart. Yeah. So what we see is this big upsloping trend line, and if it's going to fail right here, that suggests we could have a move back down to whatever, even to 97, and that would keep us within the wedge, and it could move down to 96, and that would keep us within the upsloping channel. So there's lots of room to move here on the US dollars and move down. And if that was to happen, that would probably be in concert with crude and some of the others starting to move up. So we're going to take a commercial break here shortly. And then as soon as we do that, we're going to come back. And I just want to talk briefly about the setup in the energy names and why I think some of them are ready to turn up, and you can evaluate if that's for you. So we'll break here just for a couple of seconds, and we'll be right back. Okay, so as I mentioned, the big thing that we're watching for here is if the overall markets can break above this consolidation range, and when we do, I think it'll be a relatively swift move back up to the highs. And once we get back to the highs, that's a place where it'll be really important for the market to try and break out. And I do say if we fail there, I think I'd be much more puck shy again. And I keep getting puck shy, but I think it's important to realize in the context of everything, the first time the Fed started to lower rates back in 2007, they thought they were doing it once. I think it was even July. And then they did it again in September, October, December. And, October, it was, we see no issues going forward. We think this will be our second rate cut and everything will be fine. So I think it was actually September and October, or mid-September and late October that they did their two rate cuts. And the stock market topped out shortly after the first one, so October the 9th. And by December, it was plummeting. Now, the difference this time is if we go look at things like then the advanced decline information or bullish percent indexes, there was some real chop in 2000, 2001. And in 2007, it basically rolled over and the data points were all one way. We have had a much choppier top, if that's what it is, right here. And so I just want to put one trend line on this chart here under this momentum indicator. And one of the things we're seeing, one of the things we're seeing here is we probably don't want this momentum line to break again. If this starts to break down, I think we're probably going to have a much bigger correction and more like October of last year, October, November, December. So this is an important zone for us. And again, the market has to get through this 2940. Now we pulled down on Monday relatively hard. Where did we find support? Right at this 100 period moving average on a 60-minute chart. No big deal. But we're also trying to get through the 50-day moving average on the daily chart. So there's some real technical work that's going on in here for the market to try and improve. And if it can't get through these levels, I think we have more of a hurdle. And again, if the VIX starts to accelerate back up into this top zone here, this is going to be another clue that we got bigger trouble on the way. So let's get over into the oils. And what I want to show you here is that, there's still some, not very many, but a few oils with a scooter ranking up in this 75 level. And that's pretty good. But the big area where, because they're so bombed out, where we want to start looking is stocks that are seriously oversold and start to move back up. So from hated to at least back to normal. And when we look at something like a ConocoPhillips here, that to me is hated. This thing is $75 last year, $50 this year, so a good 20-30% haircut. This Denbury Resources, this chart was $6 and went to $1. So lots of these are really bombed out. But the names I think that are starting to percolate, some of the Canadian names like Encana, this chart doesn't look very good on a 1-year basis from $14 to $4. But when we show it on a close-up chart, and maybe that's what I should do, is just go to a 60-minute chart just to give you some idea. So this, you can see it's been sitting here for about 6 weeks. And it did the same thing back in 2016. And when it finally started to move, it was pretty helpful. So again, it's a commodity. You're looking for some sort of a base for it to break out of. And here you go for a 1-month base. And again, this stock has 50% natural gas, 50% crude oil. And it's trying to break out above these prior highs. It's similar to the S&P 500, but we're really starting to see charts like this get set for a move. And if we go to CNQ, which is Canada's largest, and the only reason I'm bringing up those names is they actually seem to start being outperformers even for the large cap ones in Canada. And you can just see this base is being built here. We've put in a higher low trying to move up. But look at this MACD histogram, and I've got a very long-term one here to kind of smooth out the short-term ripples. This is on a 60-minute chart. If I go to a daily chart, so again, this would be for not as people who are less aggressive. They would wait for this chart to start to improve and the histogram start to get into positive territory. But the component that I think is more important here is once commodities start to base and you can draw trend lines across the momentum, I think you want to be aware of a change in trend and trying to pick up those change in trends. Again, in a commodity, you got to buy them low, and as they run up, that's what you want. You don't want to wait for a breakout in a lot of these commodities because they range trade. I mean, if we look at the price of oil for the last 5 or 6 years, it's really a range trade. So you buy them near the lows and sell them near the highs, and they can have big moves. They can move faster than the tech stocks can. But you also have to sell them at the top, whereas the tech stocks, you might not have to sell them at the top unless you're having an overall risk aversion in the markets, and then the tech names move down quite hard. So with that, I would just say that on these oil and gas names, go look in around this 25 level, and maybe I'll just do this right now. Let's go actually up to the top, and to take these numbers off here, we want to sort it in this order, edit. We have to get rid of all of these numbers at the front, so we're going to go do that. And the way we do that is we go down to the bottom and select all, and then it says remove numbers from, and we're going to remove them all. And if it doesn't have a number there, it doesn't care. That's all fine. And then as soon as it does this, we're going to go back to summary mode. And in summary mode, we get to pick our sorting order, and we're going to use the SCTR ranking to help us with that. So this is just about to finish here. So we'll just let that happen. But again, what you're trying to do in a commodity is find stuff turning back up. So it doesn't mean you have to buy the absolute low, but you want to be aware that the base is starting to set up. And again, these names are so oversold. And I keep hoping this chart's going to refresh soon, but it hasn't done it yet. So as these names fill in, what we want to do, let's just go to summary. As they base and start to break out, I think they make for better charts. And so here we're going to go to whatever. We could either sort them on the charts that are improving over the last month, or we could just sort them on this scooter ranking. So let's go down all the way to the bottom again, and now we just say number in sorted order. And as it does that, this is a big chart list, so it's got a lot of work to do in here. But as soon as it finishes that, we'll go look at some of the stocks specifically in that 25 scooter ranking range and just see if there's some bases being built and some levels we can start to walk through. And we can. The other thing to think about is, again, if you're looking for a weekly chart starting to turn up, you can use things like the full stochastic on the weekly. You can use things like the PPO or the PMO, MACD, if that's your favorite. Just something to try and get you to help find the momentum coming off of the lows. I still, as difficult as the overall market picture is here, all of a sudden crude is starting to improve. And in the last... during this hour, it's actually been jumping up. So let's scroll down here and just start to click on this chart list. We'll find something right around, well, here's World at Shell, so that one's easy. And just look at this chart. So it's been trying to base here. Full stochastic has now given us a buy signal where the line is above its signal line. It's not back above 20 yet, but you could use that as a helper. But even if we just pick this, so this is the 400th or 40th chart, let's go to view all mode, and then we can just scroll through the rest of them. So what would be out here? Is that right? What is the number? Nope, sorry. I went too far. this is going to be better. Okay. So what we're looking for here, again, lots of charts with the scooter ranking below 30, all of these with 10 per page. But as we look down here, what we're trying to find is stocks starting to outperform. And here's Tellurian, and it's, making a higher low here on the full stochastic. It had some real volume come in a couple of weeks ago, and now it looks like a pullback. So if you got any sort of pullback to support here, makes for a nice risk reward. Canadian Natural Resources, again, Canada's largest oil company, and you're sitting near support, so you need to find a way to look at these names. Holly Frontier, this one actually has put in a high. If this was its low and made a higher low and a higher high, that's exactly when you want to start to buy it. The one-year downtrend is broken, so this would be the higher low. This would be an excellent place to get on board with your stop right below 42. Too low oil, as this chart is grinding sideways, nothing really to look at, so we'll leave that one alone. Here's Valero, and it's holding support in here. Again, buying it near $70 looks okay. I would like to see this make start to turn up a little bit here, so maybe I have to wait for the full stochastic to give me a little turn to make me a little more interested. Matador, this one's still pushing down, so might have to wait a little bit on it, but Marathon, I mentioned this one the other day. This is starting to set up in a basing program. And again, the PPO is flat with a higher low here, higher low on the full stochastic. So a lot of things starting to show up that make it work. ExxonMobil, not my favorite name in the space, just too big and clunky. It's not really going to get any revs. Ecopetrol, what you see here is, again, testing support, full stochastic trying to turn up. And, it doesn't sound like much, but this was a 20% move. So these charts are, again, they can move very quickly. So in general, I think the biggest thing that we want to look for is, sorry, I'm going to go here, DBC, is we want to look for a commodity low to start building here. And this is the total commodity index tracking fund. And I noticed the industrial metals tried to perk up, and that would be DBB would be the ticker symbol. I'll show you that in a sec. But again, we had this big push down yesterday, and it dropped hard on the open, pulled down and closed way up, and then today shot right past the prior bar and has gone all the way up here. Now in 2 days, it's covered pretty much the full range, just when everybody feels beaten out. So for some reason, there's something perking in the commodities, and I would just say just to be aware the trend change is valuable. So let's quickly just look at the industrial metals. And again, this is a hard chart to buy until we get some sort of relationship with China figured out. But this thing is starting to turn up. Look at this jump off the bottom here this morning. And again, downtrending slightly, starting to turn up. If we go to that weekly chart that we want to talk about, this is the kind of price action you want to see. You've got a higher low in your full stochastic, trying to break this downsloping trend line in momentum here. I would really like this setup, and then that would get you on board with a whole bunch of the metals and miners. Okay, so thank you for taking the time to join me on Market Buzz. Market Buzz airs live on Wednesdays and Fridays at 10:30 a.m. Eastern Time, 7:30 a.m. Pacific Time on StockCharts TV. You can also catch replays on the StockCharts YouTube channel or on a StockCharts TV which has a running list of technical charting informational shows. And lastly, go check out Martin Pring's video and perhaps mine as well. Thanks, everybody. Bye-bye.